Good morning, traders. Today is May 15th, 2020, and it is Lotto Friday. This is an email that gets mailed out to all of our subscribers. If you're not currently on the subscriber list, which is free, it's a free email, you can sign up. There's a link in the description below. So, what is Lotto Friday? We call it Lotto Friday because that's the day the options expire. So the premium comes all the way in, and we can catch some big gains, or they can go to zero rather quickly, depending on the momentum of the stock. So it's a risk all trade. So a lotto trade is where you're willing to lose the full amount of the option. So you take smaller size, and it's got a much higher risk reward. So the trade, sometimes you think this is where you see those 500%, those crazy percentages in one day moves. Or it can work against you and quickly go to zero. The later in the day that you take an option trade, premium comes out. So if it's going against you, it'll go to zero. If it's like a 5 cents option, I just let it expire. If you took an option that's maybe 40 cents, it went down to 20 and it's going against you, I would sell it. We use contracts expiring today. And one very important thing is pay yourself as the price goes up. Everyone sees it going up, going up, going up. It's 100% because they go up quickly today because it's expiration day. And they forget to pay themselves. If you buy 10 contracts, sell a quarter when it's up maybe 50%. Sell another quarter when it's up 100%. Sell another quarter when it's up 200%, and then you can let the rest ride, and you've locked in 100% on the trade, no matter what happens. Okay, so these are 3 trade ideas. I also wanted to share a website with you, very useful website. It's called Apricot. I'll just leave it up here a second so you could see. Apricot. Okay, you can type in any ticker, and it shows you the max pain, where people lose the most money and the market makers make the most money on the Friday. Now today is the 3rd Friday of the month, so it's a big Friday. That's the main option expiration. If you notice, some options have monthlies and a lot of options have weeklies now. But monthlies, what everyone, all the big houses hedge against is the monthlies. So as you can see here, max pain for the SPY is 282. And we do have a chance of being around there. We got negative news out of the retail today, which was expected, but it was worse than expected. Here's the SPY, just to see. So right now we're opening up right around 282. Futures were a little worse when I looked at them, $2 worth. So we'll see what the open does. We know it could be whippy, just like yesterday. Yesterday, down, 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 negative. Then somebody came in, institutions, or somebody was buying the banks. Rumors came out about Wells Fargo possibly being bought out by Goldman Sachs, and the bank shut up, and then all the shorts had to cover, which caused a massive short rally. And that happens in a bearish tape, which this week we had a bearish tape. The whipbacks are vicious, so that's why you have to set stops. That's a must. Not on Lotto Friday, but in general, set stops. I use a 50% stop, or if I'm watching a stock, I use a certain measure. So like if it gets below the 50 EMA, I'll just stop myself out because I'll have it up. Okay, so let's go over the stocks for today. First one, Starbucks, and I laid it out for you guys. The call I like, based off the price right now, obviously a lot can change. It's 8:30 in the morning. The put I like, and the max pain level. So this one is attainable to the long side. Bristol Myers, call I like, put I like. This is attainable to Bristol Myers. I don't know if the drug stocks will be affected by the retail sales news. I don't think people are going to stop buying medication they need. JP Morgan, 89. This one is attainable. We're right in that zone. MA had a great momentum yesterday. I could see a possible pullback today or a breakthrough. We don't know. We have to let the charts tell us. That max pain, I'd be shocked if that happened. So let's go through each chart. Okay. Starbucks. What are we looking at? Let's zoom in. Okay, so Starbucks. Let me just put this on the side so we can go over the chart and tell you how I take the options. Right now, everything is obviously opening lower from where we closed yesterday. So Starbucks is going to open around 73. We'll see closer to 9 o'clock what happens if they pull these futures down more, or what's going on. Here's its range for today. I think we can get up to 75, 79. That's why I chose the 74 calls. And I think we can get down to 72 pretty religiously. It's a little lower. Sorry about that. 71, 77. And if they really decide to rip the market at the end of the day, pull the market, sorry, we can test the 50-day SMA, which at open should curl up and probably will be touching right here. That's why we stopped there. So when would we take the calls? We would take the puts. I would take them, it's 73 now. I would take them closer, since we're taking the 72s, a break of the 72.89 level. I would take the puts there and ride the momentum down. Now, because we're opening lower and I'm saying 74 calls, we'd probably, if we open below 72.89, want to take the calls if we break above this. And we'd be looking for 74.36 if we can pop the top, 75.75. Now, we also want to talk about adjustments, so we're opening in different spots. If it suddenly opens and gaps down in the next, let's see, it's 8:51, so we got 40 minutes. Adjust your strikes. So if I'm saying 74 calls, but we open down another dollar lower, let's say, and then we see momentum rising, go up to the 73 calls, because they'll be the same price the 74s were. So you have to make adjustments like that. So that's StarBucks, and then if we look at our apricot, just to show you, for example, there it is, 75. So if they pull the market like yesterday and then rip all the shorts heads off and cause a short squeeze, it could get to 75. And that is the first one. The second one on the list, which I'll pull the list back over so you guys can see, is Bristol Myers. I don't think it'll be, like I said, I don't think it'll be affected as much. It's a drug stock. It had good momentum yesterday. That's what's going to be in the news. They're talking about all the drugs. So this one could be the relatively different from the market. Just trying to find the right words to use. So we're looking at the 65 calls and the 63 puts. So Bristol Myers. And you can even see here, it's implied open is not much different than where it is now. And Bristol Myers does have the strength to have like a dollar something move, $1.30 move in it. So what would I look for to get into those 65 calls? I'd look for a pop of the top, meaning right about 64. I would take the 65 calls if we can get above that. We're opening right now, it says 63.60, so where's that? Right around here. We have to see where the open is. On the put side, any kind of negative momentum, which let's see if I can pull up. So negative momentum would be like here. You see a crossover, okay? You start seeing that crossover, that's when you grab the puts. And that's also, if you're on the long side, guys, just to show you. So we'll look at this chart, the 10-minute. This is also a lesson on entering and exiting trades. Say you're in Bristol Myers, you got in on the 5-8 crossover, right? This is the 5 EMA crossing over the 8 EMA on the 10-minute chart. You got in, you got in, you got in. Past our point. We're not yet at our target, but what do we see? We start seeing topping formation. So you got to recognize that. Wicks show topping, right? Wick shows little topping. Now that could be a point you can get out. You can always get back into a trade. It's normal for it to come back and test the 8 and possibly go back up. In this instance, it tested the 8 and came down. And what did you have? The 5-8 crossover. So that would be an exit signal. This is the squeeze. I will do a class at some point teaching everybody how to use this. The candles are just different colors. It doesn't really matter. What you're looking for more is the 5-8 crossover, which you can do on any chart, and the 5-8 crossover to the downside. We'll get into all this stuff on a different session. So that's Bristol Myers. So basically downward momentum is how I take that, and I would use the 63 puts. Max pain is 60. It's attainable, not likely. Like I said, max pain is where the market makers make the most money because there's the most open interest on both sides of the trade. So it is attainable. It also would bring us, well, it would bring us below the 100. So I don't think we'll get there. That's why I chose the 63 puts. I think 61 is more realistic, and even a reversion back to the mean, it's 61, what is that, 96? Or 20, that's 33, sorry. Right around 33. So that's Bristol Myers. Next on the list, I think we might have a wild ride in these today. JP Morgan. 89's max pain, very attainable. 90 calls I'm looking at, 84 puts. Let's go to JP Morgan, see what it's looking like. And the futures are starting to buy up a little bit. There are all different ways this can play out today. That's why we just read the charts. Okay, so JP Morgan right now is opening up down about roughly a buck, let's call it, not even a buck. So you're at 86, right around here. So the same thing. I mean, you could wait till you break 87.03 to 87.35 area and then jump into the 90 calls. I think if they do run the banks again, they will get a next leg up because they were pretty beaten down. Reversion to the mean is also at that weekly. So if they do run the banks, that would be a logical area for them to run them on a Friday too. Also bringing us to that 89 max pain level. So that's why we chose the 90 calls. So that's to the call side. To the downside, break of 86.38. Or obviously if we pop, get failure at resistance, meaning we touch this 88.49 and then come back down off of it. Kind of like what we did here at the end of the day, right? We almost touched it and then we just backed off a little bit. So failure at resistance, then you could take it short. So that's how I play JP Morgan. I'd watch the banks, watch them all. The only one I wouldn't really pay attention to is Wells Fargo because there's news surrounding it. But JP Morgan, Bank of America, PNC a little bit, Citibank, they should all act the same. JP Morgan, you get the biggest movement on a Friday, on an expiration Friday. That's why we put that up there. And last on the list is MasterCard, which we should get some good movement. We're not going to hit max pain, which is at 260. So we're looking at the 280 calls or the 270 puts. We know MasterCard has range, right? I think it's going to have a greater than applied move, especially on today, which is Friday. Just so you know, if you use Thinkorswim, it shows you they're expecting a $5 move today. That shows the expected move, so we're looking for greater than expected moves. Little trick in case nobody knew that. And also let me show you something else while we're on that. To see where there's heavy open interest, you just go to open interest. So the 260s, obviously why that's max pain. That's where the most contracts are. See that? So if they actually brought it down there, which I don't think it's dropping $17, but you never know if they rip this market apart today. That's where the market makers would make the most money. We're at the 275 area. So we're right around here. So the 290, the 280 calls right now, they'll come in because the premium will decay. Okay, that should come in. Should be about a buck. I mapped it out on my other computer, which lets me price out where they'll be. They should come in about half. So those would be about a buck, maybe even less, with it pulling. And you'd only want to take the calls on a curl up or on a pop. And then the 270 puts, obviously those will be a little more expensive. Now two things happen. So you're going to get time decay is going to kick in. So the theta will cut them in half. I don't have the theta up here, but it'll automatically lose the amount of theta. Theta is how much it loses every day automatically because of time decay. Delta is how much the option moves per dollar. So the 270s, let's just say they're 48 cents, which is pretty realistic because it's in between. Stock came down, theta decay will cut them in half. So 48 cents with a 21 cent delta, $2 down, means you'll almost be at 100%. You'll probably be there because there's another factor called gamma, which moves up delta. Totally different discussion. I'll have a class on that too, teaching you everything about options that you actually need to know other than just throwing darts at which option to take. There is a method. So that's MasterCard. Look at the chart. I mean, realistically, like I said, if they rip this market down, MasterCard had good news yesterday, so you could see some profit taking today. it does have room down to that 270. So why do we choose the 270 puts? Because as it gets closer, or if it happens early in the morning, they'll go up drastically. Now, if you crack that, we do have the 269, and we do have a 264 double bottom. You know, it's Friday, weird things happen, especially on OPEX day, which is today. To the upside, 282.58. I mean, if this market gets strong, we're going to test the 200 day. 1 test, 2 test, 3 test, 4 test. It's just 200 days of magnet. So on strong, we're going to test that 282. We get through there, we will test 287. I think the market will be pretty strong. Another way you want to trade option trades, okay, for Lotto Friday. If you take a trade in the morning, as soon as momentum turns on you in the morning, we have 3 trading sessions. We have the morning session, okay. We have the lunch session, which is usually just chop, except for a few relatively strong or weak stocks. And then we have the afternoon session, which is power hour. So you could be out of your morning trade, go get lunch, because you guys know the chop when you're just sitting there watching the charts, and it looks like, I don't think we had too much chop yesterday, but let's just take a look. I mean, this is here, chop. You can't trade this, guys. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, even there. It's not enough range for MasterCard to trade it. I mean, what progress did you actually make? You started at 1250 at, let's call it 273, and you were still at 273 at 1450. So let me go back. That is, and if I'm wrong, excuse me, 250. 250. So that's chop. You don't want to trade that, guys, and especially on a Lotto Friday. They rip the premium out. Now over here, right before 3 o'clock, you can get into a trade. Momentum up. This is where you make the big bucks. Momentum down. This is where you make the big bucks. Same thing for the morning. Big bucks on the way down. This was a total reversal. They came in, they bought the banks, they ripped everyone's heart out. Okay, it was a total short squeeze. Everyone was short, 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 short. What happens? You got to cover, so you got to buy the stock, 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 and it forces the stock to go up because there's buyers and they're buying, plus there's people that were short that are forced to buy. So it's like a double whammy, and that's what happened yesterday. And if you go, like I said, going a little longer than I wanted to, because I want you guys to be able to see this, but I just wanted to show you this because I thought it was important. Okay, let's go to Thursday. This is a 10-minute chart, bottomed, okay, close to bottomed. There's your crossover on the 10, ripped your heart out. So that's why we watch these crossovers, guys. You're better off making a little less, okay, and getting out of the trade. Obviously, you should have taken some off here if you're in the trade. I wasn't in this trade. I'm just using an example. If you were in it, it's a decent pull. You would have made a decent profit. You got to be taking profits. Plus, you see that candle. Wicks are the key, guys. Wicks mean it's having a little trouble. And the second candle, right? Opened up, got a little wick, then started bouncing. So those are signals. So those are pre-signals to the crossover. Like I said, trades are virtually free right now. So, you know, it's cheap to trade. You can always get back into a trade. Wouldn't you rather spend the zero commission and whatever you pay per option than lose the total price of the option? Your trade's just a click away, right? So I want you guys to think like that. Don't have any predetermined direction on the market. Yesterday was a perfect example of everything was showing down, 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 down. And the big boys came in and said, let's buy the banks, let's throw some rumors out there. The banks were the weakest sector in the Dow. That ripped the Dow going. That got all the shorts started to get scared, and you got a total short covering rally. And that's what happens, like I said, in a bear market and a bear week. The snapback rallies are vicious. So you got to be prepared for them. 50% stops or certain triggers that make you stop depending on how you trade. That's it. I hope everyone has a safe trading day. Enjoy the video. I will be doing 2 educational videos this weekend, plus my normal action plan for next week. So have a good weekend. Let me just leave this up here for 1 sec for people that need to look at this. Don't forget about adjustments. Take profits when momentum fades. If you don't follow me, you can follow me. I try to do it as live as possible at Breaking Options on Twitter. Obviously, some of these things move quick. but I try to give you guys as much information as possible, and watching these videos should definitely help you know how I'm thinking. Have a safe trading day, and I will speak to you guys later.